What's up, everybody? Happy Monday. Today's Labor Day, September the 4th. That being said, we have a nice short week this week, which means lots of volatility. So the setups that you want to jump into, not only look at, but jump into, should be very, very high probability, right? Let's not fool ourselves. Let's make sure that everything we jump into this week is extremely high probability, even if that means you got to pay a little bit extra to see the breakout occurring and back testing, right? You got to see, maybe you want to see that large green candlestick. If you're looking for something that, for example, wants to get above 100, let it hit 101 first. And so you have a little bit of security, that it's going to break out. You don't want to get faked out this week. The volatility is going to be very, very, very high this week. So let's jump right into it because we have a lot of names to discuss today. But before we get into any of the names, quickly looking at the earnings calendar this week, we have Zscaler, we have Express, we have AI on that one, we have UI, we have GameStop, we have ChargePoint reporting. I was just looking at ChargePoint's chart. ChargePoint's chart looks very nice. I need them to be above $15 though to take interest. What else? We got ABM reporting, DocuSign, Restoration Hardware, Zoomies, and we got Kroger. Kroger's going to be an interesting one. Kroger's always a fun one to play. So this week, SPX is the first one. Obviously, SPX broke out of this falling broadening formation, tested the high here, broke through the range of this candlestick on this one day. This was absolute monster day last week, and it's just been kind of chopping, rejecting this level over here. Rejecting this level here where we had previous rejection. It looks like there's a little small bit of supply sitting around this area. Actually, I venture to say there's some supply sitting all throughout this area here. Right? So this is either we chop through this area or we rip right through it. So we'll see what's going on with it. If we do reject this 45.50-ish, then I can see us retesting that 4,500. I think that 4,500 is going to get, you can see that on this day we opened up above it, tested it, and then kind of bounced, came back to it on Friday and touched it, made sure that we still want to sit above 4,500, which we do for now, right? So maybe we reject this area and come back and chop around between 4,540 and 4,500 for the next couple of days. So I'll be prepared for that. Now, if we do break that 4,500 to the downside, we're going to go target immediately to this 50-day moving average, which might meet us around the 44.80-ish level or so. Otherwise, if we break through this level, we got a small gap above this candlestick here, right? I'm just going to draw a line right there. Small gap above 45.50 into 45.67 or so. So about a 17-point gap that we can easily rip through depending on what the volume looks like here. But and depending on how much conviction there is in the market for an upside move, right? So that's SPX. Next one's QQQ. Same setup, broadening down, rippy, and then kind of like working its way up, making higher highs, rejecting at a previous level. Now QQQ opened up at the top of the gap and kind of worked its way down, right? So same thing. I mean, we can pull back to test that 375-ish area. Otherwise, that 380 is going to be the area to break, right? Above 380, we can get to 385, right? Where all that previous resistance is sitting. Just going to point it out right here, right? We got 1, 2, 3, 4 days of upper wicks right at that level. So that's the level that we're going to target, hopefully for this week, depending on what's going on with the market. XLE, beautiful setup. We had that kind of a bull flag. Same kind of broadening down, but a little bit messier. It's easier to draw with these with this downward channel. Broke through the channel and it has been ripping every day, ever since. And on Friday we made a new high for the year. Let's see, is this 2023? We made a new high for the year, or for since February, right? Since February, the yearly high I want to say it's either this one or it's this one. This is our yearly high. So took out February's high, and now our next target will be at 93.15. $2.50 move to target that 93.15. There's something brewing in the student loan industry that I believe is a direct benefit to the banks, obviously, because some of the banks that loaned out are going to start collecting those payments once more, and not only the principal but the interest, which is really where they make their money. So I think that's going to be a good catalyst for XLE. Oh, sorry, this is XLE. Yeah, I'm not too sure what's going on with the world in terms of energy, but if there's usually I think, and let me just before I put my foot in my mouth, let me just check the seasonality on energy. I believe that it is better for energy towards these months. Yeah, so September is, so you have April, September, and November as the highest months for seasonality for XLE. So what that means is actually will show the most strength during those months. So we're entering a strong month seasonally for XLE. Typically, it's a very weak month for tech and some of the bigger names. And then we have that quad witching coming up, that big quad witching coming up in the third week of September. So we might get a nice strong month. Whenever tech goes down, energy goes up, right? They have an inverse relationship. So that being said, if you're looking for something that's going to show strength, you want to buy some calls, maybe you're not used to playing the downside, I would look into XLE for a continuation move for the rest of this month, right? Targeting at 93.15. Above 93.15, we got what looks to be 94.71-ish, right? And then, yeah, I think that might be all-time high, this candlestick right here for this ETF. 94.71 is the all-time high. So we're not very far off, right? We're not very far off. So just something to be aware of. XLF, kind of a cup and handle vibe. Here's your handle. It failed the handle, but it bounced at a previous level of support or resistance, turned support. And we're above the 200, above the 50-day, which is my red line, above the 20-day, obviously, which is the blue line. And so we have 34.82, which we have to compete with, which you see a bunch of price action forming along that 34.82. So above that level, we can go and target that 35.50. Above 35.50, we got $36 for XLF. And again, XLF has something brewing with the student loan debt coming back into play within September and October. So just keep your eye on it. All right, let's go into the names. NVIDIA. The reason why I like NVIDIA, the chart, I don't think this is necessarily a good looking chart. The weekly looks really, really good, right? So the weekly looks good because you have like kind of a strong move, consolidation, a little bit of a bounce, and then like strong consolidation, strong testing of range up and down, broke down below support, and then immediately went back up into it, above support. And now we're trying to test new highs, right? We made a new all-time high with NVIDIA 2 weeks ago, where NVIDIA hit 502.66. And this past week, again, we tested. We couldn't quite make it above that 500 mark, but we got to 499.27. But you do see the inside bar on the weekly. So that's what's powerful about this chart. And if you look through if you remember the server and you see, there's something I posted on the trade floor a couple of days ago, yesterday at 10:36. They were showing NVIDIA options matrix, and basically this came from Alessio Urban on Twitter. So basically traders are accumulating on 600 and 780 strikes. Speculation is going crazy. $500 main liquidity wall. So above $500. So everyone's selling at 500. If you bought it at 250 or 300 or 400, you're setting your sell at 500, right? Nice even number. I think this puts NVIDIA at like one of the highest market caps, either the first or the second highest market cap in the market. So 500 is like an easy place to think. Like, let's say you bought it down here, you're going to sell at 500, right? Say you sell at 500, call it a day. Imagine how many other people did that, right? So, but we do have an inside bar on a weekly. And if we get buyers to push it through that $500 level, you can see my future projections on Fibonacci, 527.18, 561.07. And then I got the 600 is like a magnet, right? At that point, 600 is absolute magnet at that point. I'm sure that there's some levels, and then we do have some levels above that, 650 and 720. But that 500 is going to be crucial, and we might just fight with that 500 for a couple of weeks or months, right? Especially with September being a weak month for seasonality in tech. But that's something that I'll be interested in looking at, seeing what NVIDIA does after it kind of overcomes that 500. Now, if we don't break through the 500 and we fail, kind of like we did on Friday, right? Let's say we continue to fail the small failing move. Right, we got this kind of consolidation, gap up, breakdown. Didn't really break down all the way too hard, right? We kind of found support where we've previously had support on Wednesday. But if we do break down below the support, we have the 50-day to target, right? That'll be my ultimate target, which is at 450-ish or so, which is not too bad. I mean, it'll be a $35 move to the downside. However, that'll be nice and healthy. It'll rest upon previous resistance. It may find support and then from there work its way and have enough power to kind of break through that 500. I don't mind if Nvidia goes up and down within this channel here for the whole month of September, just to get through that seasonality, that seasonally weak month, in order to then break through in October and November and into 500 and 600. Then I think that's a good look for Nvidia, but we'll see what happens. Either way, I'm not forcing it. Well, Nvidia stays on the watch list though, so it should be on yours as well. D-Dog, I like Datadog strictly for this gap right here. It's sitting below the 50-day moving average right now. So the 50 for a tech name such as Datadog is magnetic, in my opinion. Oh, I hate when that happens. I had a sneeze that I couldn't get out. Anyway, so the 50-day is magnetic. So I think that the first target will be that 100, and not only that, but it's sitting at the $100 mark. So between the $100 mark and the 50-day moving average. D-Dog looks like it wants to just jump into this level. So that'll be the first area where I think we go. The only thing I don't love about this is we did have this kind of rising wedge, which usually breaks down to the downside, right? The good thing is that we do have a bunch of support sitting in this area at $95. If we do break down into the $95 mark, then we have the 20-day and the 100-day to rely on. And as you can see, D-Dog likes to sit on that 100-day. So the 100-day is going to be a good target if you do want to play downside, right? Downside would be a good look for this, especially since we formed this doji here. This doji at the end of this kind of strong move to the upside, strong move from the last earnings till now. And a breakdown on this doji, we could just target some of these lows, right? We got the low of 94.66, and then the next low of 91.85, right into that 100-day moving average. So that's what I'll be looking for if we do get the downside break. Otherwise, I want to see it touch that 50 at $100, and then above that $100 mark, we got up until 106, where there's a little bit of a gap in volume. So very, very good setup for Datadog coming into this month. And Datadog is tech, and tech seasonally is very weak during September. But if there is some strength in this sector or strength in tech, I think that this is one of the names that are going to give us a nice move, from 97 into 106, about $10 within the next couple of weeks. Hopefully, if we get the strong move, right? Otherwise, again, go back down to 100-day. Underneath the 100-day can come to the bottom of this move here at 84.48, and then the 200 might save it around that point, and then from there we can decide what we want to do. Next one is X. So I like X on the weekly. We did have this massive gap up, and then kind of a consolidation 2 weeks ago, and then last week a little bit of more of a consolidation. We did test the low. We did break down below the previous week's low, but then we bounced and kind of worked our way up to continue the upside move. Now, as you can see, price is still wedging within this one candlestick. I was expecting this move to occur a little bit more quickly, but I think that having patience is much better, right? So that's currently what's happening with X for now, right? This is the low for now. It can at any time break through and target this 20-day moving average. It can target the 50-day if we get some really bad news. Otherwise, the fact that it's still holding support, especially this support here from Monday, I think that that's a good indicator that this might continue to try to break to the upside. So we'll see what happens. If it makes it up and it starts acting funny up here, then we know that we can short it, right? So I think there's going to be some money in X for us for the next couple of weeks. Let's see. Next one is CCJ. CCJ, I mean, what can you say? It's just showing strength, absolute strength. I don't think this is all-time high for CCJ. Oh, it is all-time high for CCJ. All right, so you got the wedge, right? Weekly wedge, breakout, consolidation, and absolute massive rip, right? Final target for this is going to be $39. CCJ looks kind of ugly on the daily. It's not like giving you like strong candles like this every single day, but it is giving you nice strong moves to the upside. So what that means is if you decide to get into CCJ, then you want to swing. You want to maybe play the 38 calls for Friday or for next week, right? for those of you who are just joining us at the beginning of the call, I mentioned that this week is a short week. It's going to be very volatile. So you want to make sure that you stay into only setups that are very, very high probability. What that means for me is I'm going to be more selective with my setups because we have a little bit less time, just slightly a little bit less time, which makes a big difference, right? Because it's not like, oh, okay, Tuesday volatility, Wednesday volatility, Thursday, Friday volatility. It's not that. It's like tomorrow we're going to get Monday and Tuesday volatility. The next day we're going to get Tuesday and Wednesday volatility. So it just, it's just skewed on those short weeks. So you got to be very, very careful. That being said, though, CCJ, it looks like it wants to reach that 38. I would see where it finds support come into tomorrow's price. If you can see these small green lines on my candlesticks, these horizontal lines, these are where all the volume lays, right? All the volume is sitting at these levels here. So I would look for it to, even if it breaks below the low of day, I would look for it to kind of sit above one of these couple areas of volume. And I'll share this chart with you throughout the day on the smaller time frames. Right, but that's what we're looking for. We want to see it, even if it breaks down, I want to see it catch one of these profiles, right? One of these lines here. And then once it does kind of work its way up, I'm looking for the 38 calls. Keep it nice and simple. The next one on the list today, and we have a bunch. Next one is Tesla. Tesla rejected that 50-day hard, really hard, right? It almost looks like a head and shoulders pattern. Here's your shoulder, there's your head, here's another possible shoulder right at that 50-day. So I want to see where it catches support. It looks like it bounced here where it previously had support here at the low of 242 and the low of 244.59, right? So it bounced off that 242 up above the 244.59. I want to see if it can ultimately work its way into this 618 golden Fibonacci level. If it can trade above this red line or along that red line, I think that there's a continuation move to try to retest that 50-day. If it opens up over here somewhere, then I think that 50-day is going to be the first target that we're going to aim for. 50-day sitting right at 256-ish. So that'll be the main target for this week. Otherwise, if it does break down, I want to see it pull back to this 50% Fibonacci level, which is at 231.93 for Tesla. Next one is Netflix. Netflix on a weekly looks very, very nice. What I like about it is it has kind of like it's wavy, right? It has a higher high, higher low, higher highs, higher low, higher high, retest the low, higher high, higher low. Very clean price action on the weekly. We made our new low, our higher low here. Now there's a potential for it to try to retest this high here of this week at 485, right? So I'm just looking for 485 within the next couple of weeks. Again, Netflix suffers from that seasonally weak tech in September, but ultimately anything into this gap, I think it is going to be good for us to capitalize on, right? Anything into that gap above 448.65 into that what is this 476 or so, right? That's going to be an interesting spot. I like it because it kind of bounced. It pulled back, it formed a new low, and then it worked its way up into higher highs, right? I wouldn't mind if it came back and retested that 50-day one more time, personally. Let me get rid of this fib. Yeah, I wouldn't mind if it came back to that 50-day one more time, personally, but that's not up to me to decide. But I do like Netflix for a continuation, for the most part, into this gap. Any strength that we can take in the market, and look, there was some days where tech was extremely weak and Netflix was putting in green candles. Friday was a very weak day in tech and Netflix was putting in strong green candles. So keep that in mind. Maybe Netflix continues that energy into this month, right? A seasonally weak month for tech might be a strong month for Netflix, right? Depending on what happens with Netflix. So next one's AMD. Right now, AMD is sitting on this channel. I think the reason why I like AMD for this week, just draw the channel out. I like AMD because it's sitting right underneath the 50-day moving average. It hasn't been this close to the 50-day since the last time it was when it rejected here on this day, the 24th of August, and then again on this day on the 8th of August. So those are the days where it's been closest and they've both been red candles, right? Whereas this day it kind of opened up and went to reach towards that 50-day. So I'm looking for the 50-day. If we do get a rejection, then we can go back to the bottom of this channel here. And then I'll just play the levels down, right? 107.63. I got 105.50. I got 103.49. I got $100, 97.40. But yeah, Netflix. AMD. I would just ride this wave, right? If it's been channeling for about 5 weeks now, let it keep channeling, right? It's probably been channeling for longer than that. right? Let it keep channeling, let it keep doing its thing, right? And just play whatever it gives you. You know, but it is right above that it's at the top of the channel, and it's right underneath that 50-day moving average. So I want to see what it does. I want to see it get to the 50 and see what it does at the 50. That's going to be very, very interesting for AMD. AMD is not a setup that I think that we should focus on this week, only because it really hasn't broken trend. Like, it's still having lower highs and lower lows. It still hasn't broken trend, unless you're bearish and you want to rip it to the downside. That's fine. But for the most part, you know me, I'm always looking for calls. But I wouldn't necessarily focus on this unless you see a candlestick forming on that 20-day moving average and it's rejecting. Because then you got the 20-day, you got the 100-day breakdown below previous day's low. We got a potential pivot machine gun to take out all these lows. That's a good setup to the downside, actually, for AMD. Next one is Amazon. Amazon had this nice gap up, came back and kind of filled it. Is riding on that 50-day moving average. Nice rippy candle on Thursday, and a nice sustainable red candle on Friday, where it kind of pulled back, but it didn't kill the move. Sitting between that 786 and that 618 Fibonacci level, between the low of this candlestick and the high of the next candlestick. So nice area for it to be consolidating in. I just want to see it continue this consolidation within these two levels here. 139.94 and 137.05, right? As long as it consolidates within those levels, I think there's faith for a continuation move to the upside. And if you just look at it, I mean, just like, higher highs and higher lows, right? Here's your trending upward motion. Here's your trending downward motion to form a higher low, trending upward, trending downward to form a higher low. So now we have potential to make a higher high at some point. Maybe not tomorrow, right? Maybe not this week, but within the next couple of weeks, I expect it to get back up to that 144 level or so. So Amazon's going to be one of those that I think that we can benefit from the next couple of weeks. Next one is Twilio. Twilio, what I like about Twilio is it approached the 50. It went right through the 50, a little bit of sell pressure here, a bunch of people taking profits, and then it gapped the very next day. On a red day, it formed a green candlestick above a 786 crucial Fibonacci level. Big move here from the low of this local low here, strong move, 7, 10, 12 days of just strong move, right? And then kind of consolidation, retested the move, failed, came down, formed some new lows, but now it's ripping and it's holding that 786 fib. So I want to see it hold the 786 fib, and I want to see it break above $66.06. Realistically, I want it to get above this level where I see a bunch of wicks. This is gonna be a tough level for Twilio. So what I would like to see, if you want to play it, I would play it above 66.06, play it into 66.99, play that dollar move, right? The premiums are cheap enough, but they move fast enough that you can make good money on that $1 move. And then maybe trim some of if you're in multiple positions, 6 contracts, 8 contracts, maybe trim a majority of them, keep 2 of them, and then put time on it, and let's see what it does, right? I think that this can reach 70 within the next couple of weeks. I don't think it'll do it this week, but I think within the next couple of weeks, it'll touch that 70. Reason being is that it's broken that trend. It had lower highs and lower lows all throughout this time here, and now it's formed a new high, right? We also have kind of an inverse head and shoulders here formed on that 200-day moving average. We got this low, we got this lower low, and then we got a higher low, and then we got the rip. So there's some potential for Twilio to continue upside move. Let's see. Next one is LRCX. LRCX, I did not like how it looked last week, but it looks so much better this week. We had the gap up. We had a little bit of a wedge. Price broke down, tested the 50-day once, twice, and bounced, made new highs. Is now this is giving us a good setup in either direction. I'm seeing this rising wedge forming. And as you know, rising wedges break to the downside, so we can break down and come back and retest this 20-day moving average here at 673. Otherwise, if it does continue and it fakes us out, as technical analysis does quite often, above the high of day on Friday, we can go and test the high here at 719.49 and then retest at 726.53, which is, again, where the final move from this candlestick here, the low of this candlestick on May 9th, to the high, swing high on May 30th. So pretty much the entire month of May, strong moves to the upside. And then we left these fibs. It bounced on this 786% fib here a bunch of times, right? Consolidated on it and then bounced on it once and twice before it continued its move up. And then it came back and retested the high of that swing move, retested it over here on the 50-day moving average, You know, obviously we hit that 161% move. We're gonna try to retest that 161% move at 726. So that's what I'm looking for LRCX within the next couple of weeks. You know, now if it does break down below this level here on the low of Friday, we have all of Thursday's candlestick to undo, and then I think that we can target that 675-ish at the 20-day moving average if we get a nice strong move to the downside. Again, another pivot machine gun potential here, right? We have each low getting lower for the previous day. So one strong bearish day can rip this all the way down into back into the low of 639.47 for LRCX. So that's going to be another good setup to the downside if we do get one of those like nasty months in tech. Apple, let's see. Okay, Apple's in the gap right now. It's forming some dojis. All eyes on Apple pretty much for the for the market, as you know. Keep Apple on your chart if you like to play tech. Let me go ahead and draw some of these levels. The 50-day is going to be my final target to the downside. If we do get an upside continuation, we get that gap fill at 191, and then I think from there we can target 195. 195 seems to be magnetic. I feel like I've put 195 in the chat a bunch for Apple. So, you know, above this 191.17, then when we got 192.91, above that we got 195. Apple has an event occurring on the, when is it? The 12th, I want to say. Let's see. Tuesday the 12th. Yeah, Tuesday the 12th is Apple's event. So I would be interested to see if there's a potential run up into that event. The event day is great for scalping. It's not good for day trading. It's really good for scalping. So, you know, maybe if you're thinking about it, go ahead and maybe buy some calls into the event day. I don't know what the hell that is. But we do have a nice strong move. We have almost kind of an inverse head and shoulders here as well. We got like a shoulder where there's some consolidation and broke down, formed the head, and then came back, formed the higher low, which formed the shoulder, break through the 50-day moving average into the gap. I want to see a continuation, right? I want to see strength this week. This week, it's now or never, right? Because we got quad witching coming up in a couple of weeks. And we have a seasonally very weak month of September. So I would like to see 1 or 2 strong days out of Apple before anything else happens. But if we do get downside, I'm targeting that 50-day moving average at 186.69-ish. ON Semiconductor Company. Remove drawings. I like this to the upside, right? We have almost a kind of a cup and handle here. We also have a double bottom down here. We broke through the 50-day moving average. The 20-day looks like it wants to turn around in the next couple of days. So let's see what happens with that. I want to see first target $100.29. Also, we're sitting right at that $100 mark. You know, once you get to that $100 mark, that might be like a beast number for a nice rippy move to the upside. But we got all these targets that we can easily rip through if we get into that $100 mark. I want to see potentially a candle like this, right? Otherwise, if we do fail, I want to see a target the 50-day moving average. Nice and simple, right? Setup is a cup and handle, double bottom, into the $100 mark. High probability setup. Lulu, consolidation all along this line here at 389. What's that? 389.06. All along this line, there's rejection. There's some sell pressure here, some sell pressure here. Broke through it, some sell pressure here, right? Bunch of sell pressure at this level. Finally got through, came back, opened up, pulled back to it, tested it, and bounced. 404. So next target, next target for this one will be 409.43, and then above that we got 420, then we got 430. I do have some future projections for Lulu, but I don't know if we make it there anytime soon. But it finally broke above that level, so that's going to be a level to watch. I really don't like these premiums either, but if you do find there's potential for longer dated contracts, like December contracts for this look pretty good. For the I believe the 420s, I believe they were, the 415s look really, really good. So I'm sure there's some more gems somewhere just sitting somewhere within those options chains for a potential continuation move, right? You also have all the support here. You had the breakdown, and then you have like kind of a spring to rip it right back through the moving averages. So strong move for Lulu. So we'll see what happens in the next couple of weeks. Cat. Let's look at the weekly on this. So Cat had kind of a downtrend that it broke down, ripped up, retested previous resistance, and continued a strong move to the upside. Now we're forming kind of a bull flag. You see my pole there, or sorry, my channel there to show the consolidation. Let me go ahead and bring that up a little bit. Now, On the weekly, let me go back to the weekly. On the weekly, we're still within the range of this 1 week's candlestick, and we're on the upper end of it, right? We're on the upper end of it. Now, we did break through last week out of this downswing, and we broke up and kind of retested the previous high, that 1618, right? We had that projected move on 1, 2, 3, 4, 5 weeks worth of price action, strong move. You know, it kind of pulled back into that 786 and continued immediately, went straight to the target, and then rejected it and back to the target, right? Same move that I'm expecting for, which one was it? For LRCX, right? Went straight to the target, rejected it, and now it's pulling back to the target. Same exact move that we saw out of CAT, or we're seeing out of CAT. Straight to the target, rejected it, pulling back to the target, right? Above the previous week's high, the previous high here at 286, 287.66. I want to see it fill that 293. Above that, we got 295, and then we got 300. 300 is going to be a magnet, I think, for CAT, especially with seasonality being low in tech. That means money doesn't flow into tech. That means money flows into this sector. Money flows into energy. Money flows into financials, etc. So this is going to be a strong time of the year for some of these other sectors to flourish. And this is a very, very nice setup on CAT for us to rip to the upside. Otherwise, if it does fail, as it has in the past, right? 1, 2, 3, 4 instances in the past where it's failed. If it does fail again, then we can just like work our way back to that 20-day moving average, right? Nice and simple, 278. You know, undo the low of this candlestick, lower this candlestick, maybe lower this candlestick. And then we do have a potential for a pivot machine gun to the downside, but I just don't see it happening with Caterpillar personally. Next one is MU. I like MU because it formed almost an inside bar. It broke a little bit on the high, but formed an inside bar, green candlestick on a red day. Nice resting bar. MU also formed, let me just pull back a little bit. It's been forming higher lows, right? We have this low down here. We have this low right here. And we have these lows over here, right? So it looks like it's time for it to retest that 72.14 where it's rejected in the past a bunch of times, right? And so that's going to be my final target for MU before maybe we reject or potentially continue to the upside, depending on what happens, you know, what's going on with the market, what's going on with semiconductors, how earnings looks. But these are the levels that I'm looking at for MU. And then above this level, obviously, we got the retest of the supply zone up here at 74, 77-ish, right? And I expect this, you know, it's not going to just rip into this area. It might just chop around a bunch, but basically that gray box is the final goal for MU for the next couple of weeks. Let's take a quick sip of water. DKS had a terrible earnings report. I think it was like a bunch of theft or something that caused this massive revenue surprise. But you know, big reaction. It closed on this day at 147.04. The very next day it opened at 116. So from 147 to 116, right? $31 move to the downside. Anybody who was in puts on this, you know, that they just like they could just stop trading for the rest of the year, I'm sure, right? But we do have a nice pattern here, higher highs and higher lows. We broke down the low of this candlestick on this day and then bounced, and then instead of working our way back down, and we can easily this can easily become an H, very, very easily, right? We can easily do one of these where we kind of work our way down, come back up, show some interest in these highs, and then work our way back down, right? I don't know where the rest of that went. But yeah, we do have that drop. It could be pulling back, maybe a bear flag, right? Let's do a 2-day, right? Could be the bear flag. Here's your pull. Here's your flag. Retesting previous support, currently acting as resistance. You see a bunch of resistance in this level here in the past at 116.61-ish. It can easily fall very, very hard, right? And then we got like on a 2-day, we got a nice pivot machine gun to the downside. Otherwise we have a nice strong gap to the upside. So, you know, anything can happen. Now these gaps don't automatically fill, but we do have that 119.22 that we can test. We have that 121.64 that we can test. Strong candlestick out of that 121.64 into a next consolidation zone. And then from 126.33, we got a nice strong move to the upside. So we might be able to expect some of these same reactions out of this candle, out of this level here and this level here. But obviously we got to get there first. But going back to that 2-day, there is a very nice, beautiful bearish setup on this. So it can go either way. If you do want to play upside, I would suggest taking it above the high of Thursday at 118.80, and then play that into 121.64. I'll probably be looking at the 120 calls for this week, or maybe even next week, because I think that DKS needs a little bit more time than just a week, personally. Next one is DocuSign. DocuSign reports earnings on on Thursday. DocuSign is above its 20-day, above its 50-day, testing its 100-day. I think that if we can actually break through the 100-day, we failed it on these few days. If we can actually break through it, that 200-day is going to be magnetic, especially with the nice 2 weeks of consolidation here. Right, good consolidation, strong breakout move, rip right through the 50-day. Right, it tested it on Thursday, ripped right through it on Friday on a red day, or on a flat day rather. So above this, we got I would call it 53.12. Above that, we got 54, and above that, we got 55 and change. Right, so that's what I'm looking at for DocuSign. If we do reject, I think that the 50-day is going to act as a good support, that red line there. So I wouldn't really go short on this right now. And we do have a nice double bottom right at this level at 46.91. So potential for a nice strong move to the upside. Last time it was at this level, it made a nice strong move from 47.34 all the way up to what is this? Why is my mouse stuck? Oh, I have my cursor locked on something. I don't know how to unlock this. Oh, there we go. All the way up to from 47 up to 64, right? More realistic would be from 47 up to about 59 or so to 60, right? So nice $13 move. Even if we form, I would love to just target these highs again, back at 54. I would just love to, nice $3, $4 move back to the upside for DocuSign. Next one is, I just have a few more. Google on the weekly looks absolutely beautiful, and then we had this measured move from this consolidation. We had the breakout here, make a new high, and then it kind of pulled back, fell right into that 50% Fibonacci level, and then has been working its way back up. It ripped, made a new high, pulled back and retested the previous high, and now it's working its way into the target at 144.69, final target. So maybe you just buy some November 145s or something, right? Call it a day. Don't even think about it too much, right? Maybe you buy some October 145s or something. Just call it a day. But I think ultimately we do get back to this level here, these highs here, this zone here. I think this is the ultimate target for us, for Google. I wouldn't be surprised if during Apple's event Google starts moving. Right, I wouldn't be surprised if that were to happen as a sympathy of sorts. But again, the ultimate goal for Google in terms of what I see for it immediately would be that 144.69 level, which we're not very far off. We're just about $10 away. So it can be done very quickly. Baba, I like the higher lows on the daily. It's above the 50-day moving average. All the moving averages are consolidated here. We did have a flat day, but look at how strong, look at how high up it went, how big of a candle it formed. Now, Baba is very volatile. A lot of these Chinese stocks are volatile. So, I mean, it can really turn around on us and go down and rip down, especially with this hammer that it formed, right? It can break down below low of day, go back to that 200-day moving average. However, I think there's more upside, especially based on what I'm seeing. Now, China's weird because what I mean by that, the news out of China and the way that their tickers move as a result is very strange because, there was some news about Evergrande being like 95% leveraged. So extremely over leveraged, right? And then, so there's that. But then you have also like Chinese government is telling the companies that they should pull back on some restrictions that allow for money to flow into investment, right? It was like something along those lines. So like really bad news in the fact that Evergrande, such a large company, is defaulting, but really, really great news in the fact that like the government is willing to step in for them and save the public sector. I mean, and the thing is like with China is strange because like there's no public sector versus private sector. It's all government owned, so it doesn't matter, right? So it's interesting, right? I mean, you know, the Evergrande I thought would be bigger news, especially like sitting around this 50 day. I thought it would be bigger news for it to fail and work its way down. I was expecting like a very, very massive gap down, but there was really no reaction to it. So that being said, I think that since there was no reaction to it, if there's any good news coming out of China, I think that we get that nice rip to the upside. 99.17 is always a target, and then $100 obviously is always a target. So again, not something that I might focus on this week unless there's like a A1 setup on like the 1 hour chart, right? I mean, this is a very good setup because we do have like kind of like higher highs, higher lows forming, rip through these previous highs, and now consolidating above it. So it's not a bad setup, right? But I want to see that setup on multiple time frames. I want to see it on the daily. I want to see it on the weekly, right? And the weekly is not terrible on this either. We had a 2 to the downside, we had an inside bar, and then we had a breakout 2 to the upside. So you know, very, very strong reversal move on BABA for the weekly. So we'll see what happens with it. If there's an A1 setup again, I would call it out for us. And if you guys see anything in BABA or news coming out of China, go ahead and share with the community. But I think there's going to be a big move in BABA these next couple weeks. BX. A name that we haven't seen in a while, a name that I haven't charted in a while. Let's see when the last time I drew. Besides this broadening, is there anything else? Not really. But we do have this broadening formation that's forming on BX. We did get a strong rejection on Friday. If there's some strength in XLF, I think that BX is going to be one of those that might go back to retest its high here. Here at $108.73. So nice $4 move from where it closed. Nothing too crazy, but we do want to retest the top of this broadening to see if broadening formations are true, which in fact they are. So I like BX to the upside. Otherwise, if we do get the failure, I want to target that 50-day moving average. You know, we got a nice potential pivot machine gun there. We kind of started it on this day. We broke through the low of this day. We might continue it into that 50-day moving average. So otherwise, if we do get a nice strong day in financials, and particularly in this name, it doesn't have to be all financials. It could just be in BX itself, right? Then break through the upside. Actually, I would take, where's it at? I would even, at the risky play, I would take it above the 50% Fibonacci, which is the lowest line here, the lowest red line here. That would be my entry point. For it to target the high of day, from there you can work our way into, look at the final target. It's just where the previous rejection is. So very interesting. So good setup to the upside or downside. We do got that bullish engulfing on the daily, which is nice. But if we do rip and we work our way into 50%, you can probably swing for a 2 or 3 day swing out of BX for this week. And I would just stay very close to the money. I mean, you know, if it rips through this 50%, I would go at 106 or at the very riskiest 107 calls, you know, for this week. Or if you want to go out further, maybe 108 calls. And if you want to go out like a month, maybe 110 calls. And then obviously if it fails below this level and starts working its way into that 103.62 level, you can go ahead and probably just rip the 102 puts and expect that it's going to get deep in the money, you know, by a couple dollars. Is this my last one? Yeah, this is my last one. Disney. The reason why I like Disney, very simple. I mean, Disney just has this small little Disney stays. First of all, Disney stays in the news lately, right? So there's a bunch of news that's affecting Disney. Also, I think that Disney's at a great price if you are into it, right? Like I have a kid, and so Disney's a company that I know that she will patronize for quite some time. And companies that wherever I spend my money, I like to invest in, so I get some of that money back. And Disney, you know, as we know, Disney's been as high, or may not know, right? But Disney's been as high as $200 in the past. Let's go to the monthly chart. Where are we at? So Disney has been up as high as, you know, ripped all the way to $200. and came back to kind of where the mean is now. I think that we'll live within this candlestick. I don't know if we'll go any lower than this. This is COVID candlestick, by the way. I'm not sure if we'll go lower than this. We might, and that's that's the risk in investing. But Disney, I think, is poised to continue. Let's see. Let me just go ahead and draw that there. I have it there for my visual reference. But we do have this gap here. We do have a hammer. I think that this little gap is going to get filled at some point. I think it's a good setup for upside. Again, this is not one that I would probably focus on for this week. I would probably just keep your eye on it for the next couple of weeks. If it does fill that gap, then we can target that 20-day at some point, right? We got these highs here. Let me go ahead and just move that over. Those highs there, which is a nice, not the risk reward on this is not terrible. You can set my levels there, and then I'm gonna go ahead and tell you why I love it, or illustrate why I love it so much. This long position. Yeah, so let's say we take an entry at the high of day. What is this? Oh, this is a fib. Hang on. There we go. Say we take our entry at the high of day. And then you would set your stop. Let's say you set your stop at low of day, right? Set your stop at low of day. Let me just zoom in on this a little bit. And this is how I visually gauge all of my plays. Usually on a smaller time frame, but nonetheless. So you have let's say you have your first target there. Even the first target play is not great. It's a 0.8 risk reward. So what you want to do is take your entry with this particular play. If you're targeting the gap, then you want to take your entry. You want to set your stop at the open or at the close of day, right here, and then your risk reward is 2.3 to 1, right? Now, if you want to give yourself a little bit more time and target this area here, where price previously rejected, then you can loosen your stop up a little bit. You still got a 1.5. You still got a 1.5 to 1 risk reward ratio, right? 1.45 to 1 risk reward ratio. And you want to loosen it up. You don't want to have your stop this tight, because it'll go up and it'll give you one of these and it'll come back down and stop you out, and then it'll rip to the upside. Right? So you want to give it some time and space to travel. You want to give it enough time on the expiration for it to do it, and you want to give it enough time if you set a visual stop such as this in order to do it. Now, ultimately, what I'm seeing for Disney is if it breaks above that level, it gets to this level. You want to say, you get from that point, and obviously as price goes up, you can go like this and leave it and let it ride if you want. That's a 6 to 1 risk reward ratio. If you're very smart, or if you're playing with a very, very tight position, like 2 or 3 contracts, 4 contracts, and you just want to let it ride and not be risky, then you bring your stop into your entry, and now your risk reward is infinite. It's infinite at that point, right? But it can rip up to 1-2 days and then come back and take you out immediately. What a lot of people do is, let me find a good example. Here's a good example. What a lot of people do is, and what I suggest you do as well, is, let's say that's your entry. Let's say you just enter, let's say you enter at the open of the day, and this is your target, right? Then what you want to do is you want to bring your stop up. Each day that it goes up, it makes a new high. You just want to keep bringing your stops up here. And then the next day, bring your stop up here, up. You just keep riding the stops up. If you use Active Trader on Thinkorswim, then it's a similar thing. Like if you do like a 30% stop on SPX or something like that, or QQQ is probably more realistic for 30%. You put 30% stop, and it just it brings your stop to a higher level. Once you get your stop above your entry, then you're always going to be profitable, right? Even if you break even, that's better than losing money. So I think about these in the same way. If you, I think this is a good setup in terms of risk reward, because you can take your entry, and then depending on what your play is, if it's a 15-minute play, cool, you can bring it up to even. If it's a 2-week play, you can bring it up. Give it some room at first, let it run a little bit, and then if you see that it's like being very profitable, then you just bring your stop up. Just always bring your stops up and keep your risk reward where it needs to be. Yeah. Nah. SPX, nah, Spider. I said 30% on SPX, and that is not the case. You need like a 50% stop loss on SPX for it to work. And then I'll just end this recap with SPX. So SPX, again, we had that broadening down. Let's go back to 2 day. I think is good. Yeah, 2 days great actually. So we had that broadening down. We had that pullback, new high, pullback higher low, rip, new high after consolidation. Strong move down, good consolidation where there was previous consolidation, previous resistance. Buyers like it. Broke through that falling resistance line, broke through the 50-day inside bar, or resting bar rather. Let's not call it an inside bar, but let's call it a resting bar. Didn't really break up too high, didn't really come down too low. So good opportunity for this to either show a strong reversal pattern to the downside, in which case it'll target here, and then if it's on a 2 day, it'll probably target there. But if we do rip to the ups, if we do break the high of Friday's candlestick, it's very likely that we're going to fill this small gap here on SPX. This very, very tiny gap here, back into that 45.76. So, and if you are playing SPX, whether you're in the community or you are watching this on YouTube and you are on Thinkorswim, set that trail stop or set that stop loss to 50% or wider. Anything under 50%, you're going to get absolutely demolished. So, and I've seen things go from $2 to 75 cents to $10 in the same day. So, yes, ma'am. So, all right, guys, thank you for being here for this call. Appreciate you. Tomorrow, again, let's share what we're going to get into, only because I want to make sure that everyone's making money this week. Yeah, same thing with me. I think I've had targets and it just went sideways for a day and then hit my target the very next day. And I play 0 day, so very next day for me is useless. But let's make sure we are diligent. We are aware of what we're getting into. Make sure that the setup is undeniably very, very good, because we have a very short week this week. We have a 4 day. We have 5 days worth of volatility on a 4 day week. So what that means is you're gonna get that added volatility in this week. I think typically this week is strong in the market after Labor Day, usually strong. But then we have OPEX the next couple of weeks, so I would expect a flat couple of weeks after this week. So we'll see what happens. But that's it, guys. Thank you so much for being here, and I will see you on tomorrow morning. See you tomorrow morning. Peace, guys.